Starting. All attendees are in listen-only mode.
Good morning. I hope you guys doing well and welcome to today's edition of our daily market update webinar here at adfx.com. My name is Alejandro Zambrano and I'm the global chief market strategist of ATFX, and we're going to take a look at the markets as we usually do. So euro dollar, GBPUSD, dollar yen, and also some stock markets and commodity markets. Before we start though, as always, I know most of you guys are experienced, but a lot of people are not. So we need to spend a few seconds on the risk disclaimer to give everybody the opportunity to understand the risks involved when trading. Okay, I think we're good to go. So let's begin. And we're going to begin with the euro, which is going to be an easy sort of update because there's not a lot of activity in the euro right now. It is stuck within a range. And as you know, I've been warning about this for quite some time. And, there's not too much for us to do. This is a rectangle. And I think the easiest way to trade this would be the break to 112.12, which is this level down here, the 2018 low that could generate a decline of about 305 pip. For now, though, the market's going up a tiny bit, but nobody really knows what's going on here in the middle, and it could easily turn rather choppy like we had here. GBP versus the USD maintains its gains. So on Twitter and also here, I've been sharing with you guys that we have a massive head and shoulders with your left shoulder here and your right shoulder here, and this is your head. Now, what's happening right now that most likely we'll get some sort of a delay to Brexit, and maybe we even have a second referendum. I think what and also what's probably the more important thing here is that we will probably not have a hard Brexit. Now there's several votes occurring. I think starting from the 14th of March and then 13th, 14th, and 15th of March. There's 3 days with 3 votes. And we'll see what happens. Nobody really knows, but the market right now is getting ready to sort of lift higher here because the market is pricing out a hard Brexit. Now, a lot of things could change. Like yesterday, the president of France said that France would potentially veto any extension of or any delay in Brexit unless the British government unless the British government sort of gives a good reason to why they want to extend. If it's just to sort of continue what's been going on right now, then there's very little appetite for that in Europe and particularly the French. So they could potentially veto that unless, of course, they present something different. So it's going to be a rocky sort of conditions, I think. I think it's going to be difficult, but for now, technically, it's looking all right. So you can see here how the market, at least in the short term, remains short-term bullish. And there are 2 levels to watch. Now, I prefer this one down here at 31.40, which is a low from February 26. I would have preferred if this little move would have gone down to maybe 32 and then pushed upwards, because now you have a low here, and that's a low one could potentially work with and be bullish about, but it's not a particularly important low or a strong low. So there are definitely stop loss orders below here, most likely. And you can see how the market went down and people bought, and probably stop losses are going here somewhere. But I think it's a bit, I mean, I don't really have I don't really trust this low. That's what I'm trying to say. So it might go down and then upwards. The question, I simply am going to go upwards. The question is if one wants to work with a stop here or a stop here. As for scalping, and just, I think 32.29 is probably sufficient. Here's the dollar versus the Japanese yen. And as you know, I've been bullish here for quite a few months, and the trend is bullish by 110.19. And the market traded all the way up as projected, and then it looked like it was going to go higher, but instead it just tumbled, moved down to the buy zone, but people bought it and lifted it upwards, and now it's sort of going back down again here. I still think people are going to look to buy. Stock markets and risk appetite overall is bullish. I'm going to talk stocks in a few minutes, but again, they're still bullish, and until we see sort of a more permanent breakdown in stock market, then most likely dollar yen will continue to drift upwards. Today we have US GDP numbers, and they're from the fourth quarter. I mean, we're almost in the third month of the year, so I'm not sure how really important that is, but it's going to give us a little bit of insight to what's happened in the fourth quarter. Of course, you had the shutdown in the US, which delayed everything, and that might even influence. So I think one should take most figures from the US with a pinch of salt over the next few months because of the shutdown, and maybe trust the markets more than the macroeconomic data. I would say. So we talked about the dollar yen and we talked about stocks. So let's actually just look into stocks right now. So this is your S&P 500. And the S&P 500 remains bullish above 2765.5. So you know what I like to do, right? I like to go with the trend, which we have been doing lately, and then we sort of track the trend until the trend breaks. Now, this market settles and hasn't really moved so much higher since the 18th of February. So that's 10 days where the market pretty much spent some time here, and it's also in the proximity of this major high here. So there's gonna be a situation here where eventually we're either gonna break and take out 28, 21, which are these highs, and the market can go upwards at that point. Alternatively, we could break below and we'll have a bit of correction. If the market starts to correct, so if we break below 27.63, I think we could potentially go down to the lows we've seen here from October 30th and on November 23rd, and as well January 22nd and 24th or so. And we could probably go down, and then we'll have a very interesting pattern to potentially work with, which would be the right shoulder of a massive head and shoulders pattern with that aggressive target. So for now, sort of the trend remains bullish, but as you can see, I'm pushing up to the funding level, and if we trade below 27.63, we probably trade lower. And until that happens, I think most people are going to be happy to buy, and people that are more cautious, they're probably going to wait for the break like that. So they're not trading in this section here. They're just going to short, or they're just going to go long. As for the German DAX, it pulled all the way back down, and it looked like it was going to trade lower at one point, but it's supported here. And this is a beautiful candle. If this candle now turns around bullish, that would be a very strong sign that we're probably going to head upwards towards 11,692, which we discussed. And here as well, we have a massive head and shoulders pattern. There's similar patterns in other European stock indices that are well checking out. And there's, of course, geopolitical issues. I was reading this morning that Pakistan closed their airspace. So now a bunch of people are stuck in places like Thailand. And there's tension between Pakistan and India after, I think, two planes from India were shot down above Pakistan airspace. I'm not an expert on this, but check it out. It's influencing the markets. You have the meeting as well between Donald Trump and Kim Jong-un, which apparently, was cut short. Not sure if that really matters too much, but that's something also that people are watching. And then again, U.S. data coming out a little bit later today. As for commodities, there's been an interesting sort of situation lately. So Donald Trump, on Friday, President Trump sent out that tweet sort of warning OPEC about very high prices and how that could hurt the world economy, not explicitly but implicitly saying that. And what's happening here is that OPEC afterwards put out a statement sort of telling them that it's still important to cut crude oil production to keep crude oil prices stable. So they're going head to head now versus the Donald Trump. Let's see what happens, but that lifted price upwards. As for this, from a technical point of view, fortunately, there's not too much to be excited about. We did not take out 57.77. If the market would have done that, gone upwards, then I would be very happy to say the trend is bullish about this level. So just imagine it goes up, and then on any dip, they could have been bought with stop losses here. But because we didn't take out that level here, I suspect the market could easily revisit that level and maybe go a little bit lower, as is still in the process of sort of correcting this move here. I think looking beyond the near term, I still think the market's going to go upwards. I think that makes a lot of sense. If you look at something like UK oil, then let's see if I can load the right one. So this is UK oil, and this is sort of very, very clear to me. You got yourself a left, right shoulder in your head, and you have that pattern, the head and shoulders pattern. The different ways of measuring, if I measure from here, so less aggressive target, you still sort of have an unmet target at 75 that could potentially be reached like that. So we still have sort of those targets, and here we in essence revisit pretty much the lows here. But if you look at it from a daily chart, we never sort of threatened to go deep into the pattern. That's sort of my key point. And there are different levels. We can work with a stop at 63.32, alternatively at 62.57. I'm gonna stick with this level here, which is more important. And I think we can go down again, but eventually, if someone put a gun to my head and said you need to be long or short crude oil, then I would choose long. As for gold prices, they're bouncing from the buy area that we discussed. It's actually bouncing quite nicely here. Here it's just a waiting game. The trend is definitely bullish. It's have been going upwards, and we have been sharing with you guys several setups, with the most successful one being this head and shoulders down here, discussed in November. I said that on the break to 1,230 we can go upwards, which we did. And this continues. It definitely surprised me how strong this is. And I'm going to stick with the trend until the trend turns around really and doesn't move upwards anymore. And that level that I'm watching is 1302. And you can see here how the price is reacting in the barrier area, which is what I'm looking for. So it's looking good. All right. Oh, it's looking good right now. And that's pretty much it. So we just covered all the main markets. If you are interested, we do have more content on ATFX. It's there, but it's not visible on the homepage just yet. Should hopefully be live later this week, if not early next week. And the best way is just to keep an eye on my Twitter. And for anything else, just let me know. Let me now see if you have any questions here which you would like me to answer. You're most welcome to just ask me questions. That's what I'm here to do, to help out. Yesterday, by the way, we had a few guys interested to learn more about ATFX. And the reason for that, and actually one guy is in the process of opening up an account, is because the spreads that ATFX offers, they're actually really, really good. They're very tight. They're much, much tighter than, for example, FXCM. I think euro dollar with ATFX Edge account is at 0.7. On GBPUSD, on the Edge account, ATFX beats all the big guys. And also on pound yen, it beats all the big guys. In other markets like Aussie dollar is at 0.7, I think it is 0.8. So you get some really, really tight spreads here. I mean, you get a lot of different markets. You can trade not only the forex pairs, you can trade shares, you can trade commodities and cryptos as well. And they're quite fast moving. So if there's a market that you're interested in, then they're usually quite fast in implementing that. So definitely check that out on atfx.com. Now, the reason why they can offer much better spreads, for example, than FXCM is because FXCM, of course, the big broker, they do have tighter spreads. But if you want to have those tighter spreads with a company like FXCM, then you need to have the active trader account. And the active trader account is at $25,000 or pounds or euros, depending on where you are. Whereas here, you can have access to those tight spreads via what we call the edge account, so the retail edge account, not the standard, but the retail edge account. So to have that sort of account, you only need to deposit $5,000. And if it's a UK account, it should be actually 5,000 pounds. But if you ask me, if you go via me, I can let you in the back door, so to speak, and we can get you in for slightly less. So the equivalent of $5,000 in pounds, or the equivalent of $5,000 in euros. So check it out. You have this. You have all the different markets here. The ATFX brand itself. We have the offices here in London, and then we have a big office in Hong Kong. And the global CEO of ATFX is actually a former guy that used to work for FXCM many years ago. So you guys are in good hands. They have all the regulation and everything needed, and they've been doing business for quite some time. Maybe not just in Europe, and not a lot of people know about them in Europe. And it's my job here to sort of spread the word. So check it out under trading and edge retail edge account. You can find more about that. If you have questions, you have my email there at alejandro.zambrano@atfx.com. You can also ping me via the other channels. If you're on, you have my WhatsApp or you have my Twitter, you're most welcome to reach out there, and then we can continue the conversation. As for market analysis, there's going to be a new little link here which is called technical analysis. It's not there just yet, but it's going to be available hopefully over the next few days. Most of the content that is available here right now is actually not produced by me, but produced by other guys. Okay, we don't have any questions. So we're going to wrap things up. Guys, I want to thank you so much for watching. I want to thank you so much for your continued support. Don, Marvin, Gigi, Taufik, and Sahid, thank you so much for watching. If you ever miss any of the episodes, you're busy or you're traveling, whatever, check out the ATFX YouTube account. So down here, you have the YouTube account, and it needs to be the English one. So on YouTube, UK English, I'm uploading the videos, you see? So you have the videos, so you can check them out. Click up here to subscribe. That's an easy way to sort of get notifications. The only thing you need to be aware of, though, that the uploads are uploaded maybe half an hour to actually at least an hour after I actually complete the market update. Okay, guys, thanks so much for watching and have a great day. Thank you.